Hello everyone, welcome back to Upside Down Data. Today I want to talk about our brand new risk indicator for NEAR protocol and its native token NEAR. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So I want to thank everyone who participated in our polls on Twitter and on YouTube. We basically gathered input on which asset you would like to see a UDPI for next. And NEAR was the winner, both on Twitter and on YouTube. So here it is, the UDPI for NEAR. So if you're returning to the channel, you're quite familiar with our upside downside potential indicator, the UDPI. Essentially, it's a risk indicator. It tells you historical points when distributing the asset might have been advantageous, as well as acquiring the asset might have been advantageous. So it ranges from 5 to -5. 5 is high risk. That's when the upside potential is quite low. Downside potential is quite high, and -5 is the opposite. That's when the upside potential is quite high, downside potential is quite low. And so you can see is the UDPI does a good job over NEAR's history of identifying these topping out points, these red zones where corrections or at least consolidation has followed, and also these green zones, these low risk periods where acquiring NEAR has been advantageous. Now it's notable with NEAR that it's really only had one especially low risk zone in its entire history, or another way of interpreting that, there's only been one particular point where it's realized a lot of its realistic downside potential. Most of the other time it's spent realizing upside potential. It's spent up in these higher zones, which is indicative of its really impressive performance that it's put in, right? NEAR has performed very well throughout its life. And so this just kind of reflects that here. You know, it went up, you know, over 10x coming out of the summer up to its all-time high that it put in recently. Very impressive performance, spending a lot more time realizing its realistic upside potential than it has realizing its realistic downside potential. So I think we can see a little bit better what the UDPI is doing by looking at its raw output across time, and so that's what I'm showing you here. The other thing I should note is that I'm showing you the long-term version of the UDPI. We have 3 different time frames that we look at with the UDPI, or we have 3 different UDPI models that look at different time frames. The long-term cares about moves that play out over months to years, so these kind of longer, more macro cycle kind of moves. So that's what you're going to notice is kind of these broad moves up into red, down into green, back up into red. You know, it's kind of more patient model that's caring about moves and risk over a more long-term period, kind of a month-to-month period. So that's what I'm showing the raw output for here, is kind of caring about risk in the monthly perspective. What's the upside versus downside potential in the coming months, for example, is what this version of the model cares about. So what we can see is that it really shot up to the highest levels of risk here back in the spring, basically revisited those exact same levels coming out of the summer, kind of cooled off while it consolidated kind of more or less sideways here before being able to realize some of that upside potential had kind of accrued or gathered, and then now it's been correcting off of that level since. So I think this is just, NEAR is an interesting asset in how well it's been performing, right? You know, oftentimes when you look at these assets, they'll go from these really high to really low to really high, then oftentimes back to really low before they can move back up so well to the upside. NEAR is a little bit remarkable in its ability to have stayed so high. I think the asset I'd compare it to maybe being more similar to is Avalanche, at least coming out of the summer. AVAX actually performed sort of like this, where it really had impressive runs, cooled off a bit, then had another impressive run. NEAR reminds, the UDPI chart for NEAR reminds me of the chart for AVAX, and they've both been really well-performing assets, so it makes sense that this has been what's happening. So, as I mentioned before, we have different time frames of the UDPI that we care about. So we have long-term, medium-term, and short-term. And so in the long-term, which I was just showing you here, you know, we've come down to this kind of a little bit still overextended, up a bit above 1. When we look at the other time frames, we get a little bit of a different picture of what's going on in the current moment in terms of risk, because they're caring about different types of risk. So medium-term cares about moves that play out over weeks to months, so a bit shorter of a time preference from the long-term. And the short term cares about moves that play out over days to weeks, so even shorter time preference here than the medium term. And what you can notice is that the graphs overall look similar, because in a lot of ways you'll see confluence between different levels on these different time frames, right? You know, in the summer, the long-term risk, the medium-term risk, and the short-term risk was low in each of those times, right? You know, we had this nice move to the upside soon after these green levels here on the short term. Same thing in the coming weeks and in the coming months, we had moves up. So it makes sense there was confluence there. But where you'll notice differences is in how these models treat this kind of intra-cycle volatility. So kind of coming out of the summer, you'll notice that the short term flashes between, you know, red down to yellow, up to orange, down to green, up to red. It's moving more quickly between those risk zones because it's updating its beliefs more rapidly on that kind of days to weeks time horizon that it cares about. Medium term is again updating a little bit more slowly, but still it's shifting back and forth. And then the long term is a much more patient model because again, it cares about the coming months. It cares about these kind of broader moves. It's not so worried about this intra cycle volatility like the short-term UDPI is. And so it's saying that kind of this whole general region is still a bit overheated, and especially kind of in this correction we've seen more recently, that we've kind of just been in a range more or less, right? That there's been some variation in the upside versus downside potential that it's been assessing, but it's not been really a huge deviance from what it's been doing in the past. Whereas in the short term, in the days to weeks, there's been a lot of fluctuation, and that's what this model is really picking up on, right? It's noting that this is kind of an overheated zone, underheated zone, you know, cooled off, ready to move, back, moved up again, now cooled off again, and who knows, potentially ready to move back to the upside. So you just interpret them differently. And it can be interesting to look at them in conjunction with each other to get the broader picture of what they're telling us. So that's what I'm showing you here, is the historical output of the different time frames across time. What we can see is that in the long term, the model still thinks there's more realistic downside potential in the coming kind of months to years for NEAR than upside potential, though that's certainly there. And if NEAR continues to kind of consolidate at these lower levels or correct further, I think this long-term UDPI will fall off. That in the kind of coming months, it'll become more bullish on NEAR as it kind of spends more time maybe consolidating. In the medium term, you can see it's actually flipped into the negatives. It's below -1, which means in the coming weeks to months, it actually thinks there's more realistic upside than downside potential. So in the more medium term, it's actually more bullish than in the kind of the longer term. And the short term is also telling a different story, where it actually corrected all the way down to almost -3 in this most recent correction. And it thinks it's getting quite bullish on NEAR. It thinks that there could be some upside potential for NEAR in the coming days to weeks. So the way that I interpret this data is to say that, you know, in kind of the broader market cycle perspective, we're still a little bit overheated potentially. You know, probably more consolidation will be needed at some point before we're really cooled off to a point like we were in the summer where we can really explode to the upside. Though not guaranteed, you know, there is still realistic upside potential here in the longer term. I would just expect that this might need to cool off a bit more for kind of in that broader macro perspective for us to really have an explosive move. But in the medium term, in the short term, there might be some more room for relief, right? You know, coming off of this pretty precipitous drop down off of the all-time high, there could be some kind of shorter term relief that's quite plausible off of that based on what we're seeing on these UDPIs here. And even if we do kind of just range in this zone coming off of here, realize some of this medium and short-term potential, you could still see long-term UDPI start to fall in that position, because the longer we build up support here, the more bullish I would expect the long-term UDPI to get. You know, the way that the UDPI is evaluating these assets on these different time frames is it's just learning from its price action and then making predictions, making expectations about what it thinks risk is on these different time frames based on what it's seen the asset do in the past. And so it thinks that it's probably going to need some more consolidation in the longer term, but it's at a reasonable point in the shorter term to maybe take some moves to the upside. So it'll be interesting to see what happens. And of course, the UDPI is a smart model. It's dynamic. It learns as it gets new data. It learns as it sees the asset perform. And so it'll be updating these expectations in real time, these risk levels in real time. So it'll be interesting to watch and see how it performs, or what it thinks about NEAR's price action as it moves forward. But my kind of base case for NEAR is I think that in the shorter term, some nice upside is quite plausible. And it could be, you know, fairly reasonable, right? You know, we fell off about 50% from the all-time high. You know, we have quite a bit of realistic upside potential to go to, even in the shorter term, start chewing some of that up. But again, the longer that we consolidate here, again, I would expect the longer term outlook to become more and more bullish Not to say that has to happen. A lot of this is going to depend on the broader market. Can we, start moving up? Things like that. If we do get more bullish in the broader market, I would expect this upside potential across these shorter time frames to get realized, and then we'll see how the longer term kind of reacts to that. So just to wrap us up, I just want to show the specific levels across the different time frames of the UDPI. So the long term is 1.26. So it's not especially overheated, right? We're not up at 3, 4, 5 like we were recently, which is the points you really want to be cautious about, especially. Pumping off of a 1.26 is not unheard of. It certainly could happen that we could get a rally off of this level. So there's still a decent amount of realistic upside potential in the coming months. It's just that we are, we do have more realistic downside than upside. So just something to keep in mind. But in the shorter term perspective, some relief is quite plausible. So, even if we would have to realize some of this longer term downside potential, this doesn't mean we have to do it all at once, or it has to be all down, or even that we have to go down at all. It could just be a sideways accumulation for a while. So in the shorter term, some relief from our current levels seems quite plausible, even if we can't go and put in new all-time highs immediately or go breaking off in a parabolic run, for example. So the medium term is at negative 1.37, and the short term is at negative 1.11. So that's just what we're seeing here. And really, these are just the last 30 days, so it'll be the same as what we were seeing here, just zoomed in on the more recent action of the UDPI. So none of this is financial advice. You should form your own opinions, make your own decision of where you think NEAR is likely to go from here. But my take on NEAR is that, especially with the kind of more bearish market conditions, it's probably one of the more overheated assets in the crypto space right now. But it wouldn't be unrealistic to see some short-term relief, especially if the broader market gets bullish for a while. And who knows, if the market goes on a parabolic run, I would expect NEAR to probably do the same thing. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.